Good morning everyone and welcome to this video. I'll try, to show you how we can take full advantage of the entire Pro system. Of course, we'll wait for the right opportunities to come along. I'll try basically to trade as usual. As you know, I work with MetaTrader even though I do my analysis on Tviso. In a few minutes when the market opens, I'll try to make some trades based on the signals from Pro and I'll execute them through MetaTrader. I'll be trading the NASDAQ. The initial stop that I have meticulously set within the trading system is precisely 40 points, which as of today should be entirely sufficient. They should in fact roughly correspond to the value of one average true range or ATR, which is exactly what I am anticipating. At the very open of the market as the appropriate and necessary stop size for this particular trade. We'll see perhaps for these initial very first trades. I'll keep it fixed. I'm leaving it precisely as it is because I genuinely want to get a comprehensive sense of what the opening pace will truly be like and what precise kind of volatility we can realistically expect throughout the entire trading day. So let's patiently wait for a few more minutes. There will be some deliberate pauses so as not to unnecessarily fill up the video, and that way it will be easier for me to cut and edit it into a video of about 20 minutes, not too long, where we'll summarize the essential key points of the trading activity I'm going to attempt today. Okay, we're basically about a minuta, couple of minutes away from the open. So let's take a look at the chart. We're working within the BC3 levels that developed this morning, so we're referring to the European session. We're above the previous sessions, so the open is good. We have so we're basically in a positive market condition. We're working on VR0, which is this green dashed line from the Pro Weekly indicator that shows us the levels. Then we have the profile indicator, which gives us the size of the levels and the projection of the reaction those levels have had. By looking at the thickness and length of the bar, it gives us an indication of the strength of the level and what we can expect based on the reference period, that is how much those levels have reacted and how many times they've been retested during the reference period, which we can set as needed. Perfect, we've started. It's 3:30 p.m. In the very first moments, I never trade right away. I always wait a bit to get a sense of what's happening. Who are the players involved here? At the very least, I try to gain this small advantage. I never enter right at the very beginning. As you can see, we had a perfect test of the lower level of the BC3 area, which is this colored section. And already here by the book, you could have tried a long position that might have taken us up to the so-called pivot level of the BC3 levels, because the line represents the pivot level of the BC3 area. So in this case, from below, from the lows of the BC3 range, which is marked by the colored area you see here, we could have attempted a very precise long from 8.50. Maybe we wouldn't have managed exactly 8.50, but 8.55 up to 8.70. So there were 20 points that could have easily been taken home. Right now I see all lower highs. We're trading below VR0, so there's a good chance we might try to break through this BC3 level. We'll probably go to test 22,794 if we break this level. Let's see if it breaks through with good momentum. Maybe we could try a small short, but as you saw, instead it tested the lower range of BC3 again, only to head back toward the pivot, giving away another 20 points. It's a shame not to have caught them, but unfortunately the difficulty when you have to explain things is that your mind isn't focused, you're not fully present. Let's see now if it breaks the level. Maybe we can catch it on the fly. Let's see. It didn't take my order. Let's see if it breaks. Okay, we're in at 8.42 really, in a pretty terrible way I have to say, but now, let's go. My target is this area here, 7.90. We can also use some references here, have some reference points on the levels of the dynamic volume that's forming. Obviously, you can see how now we've exited from the BC3 level. That was the trade I wanted to make. In this case, for example, you can also do it like this. Maybe you take profit on one, let the other run, maybe set a stop so that we can adjust it. I'm doing it from the chart. You can see how I set it, trading the price. You can see it here. Now we're at 8.36. So worst case scenario, let's at least take something off the table. You see how it entered. The VLC has also activated, showing us that there is incoming volume and it's coming in on the downside at this moment. You can see how the price is moving. Basically, we're already doing a free risk trade because we've collected 130 just accounting for commission, okay? And a little something, and we let the other trade run so that we can be at ease. If the price should retrace and closes us out at 836, we've basically pocketed, well, 7 or 8 points per contract, and we've made it through the initial phases of the market unscathed. Maybe if the price accelerates now and doesn't pull back to 36.50, maybe we stay in and perhaps go on to test the 800 area, which I would really like. As the price moves forward, of course, we could also decide to close the trade completely right here, which wouldn't be bad at all, but we can, well, stick to the plan and see if it goes our way. I'd really like to show you that maybe we can grab a little something more. We've taken at least 10 points on this contract that's left, the one we still have open. Yes, we are getting really close. I want to exit because this is a point where the market there, we're out. Perfect. We've completed the first trade with 2 contracts and we've made about $400. Let's see if now they'll find the strength, because it's likely that we've stopped at these double tops here, which at this moment have also created this volume node. You can see how everything lines up within that area, which we can identify as a range area between VR0 and VR and VS0, which give us indications of what could be the start of the week as it was, because we started from here. In short, the market is staying here. We made some attempts to break upwards because there's positivity, but at the moment this attempt has been rejected. You can see how all the highs have been decreasing. Then we went to test the lower level and there was a rebound, and just as we had imagined with the break of BC3, I entered with a quick price, placing the order directly in the book. In short, I immediately closed one contract as soon as I got, well, 7 or 8 points, so I halved the size, protected my capital, and well, I took some profit. This allowed me to manage the other contract more calmly than placing the stop and, well, just following the price. Now the market is continuing to fall. The market, well, they actually hit exactly my 30.25 and then went further down. We definitely could have taken a few more points. At this moment, I wouldn't go short again unless we reach this level, which is the opening level of the regular trading hour, with the pivot we have further down. So a re-entry into this BC3 range could also lead to a test of the lower BC3 level or even VS0, always based on let's say what we know about the strategy, how to apply the strategy. That is, as long as the price moves within the range we've identified, which we can determine with the first 2 support and resistance levels of my strings, namely VR0 and VS0, we can definitely identify that area where we can move to understand what's happening in the market. Then, of course, we have the string levels that we can get here with the profile level. Further down here, we have the HV level, which then corresponds to the weekly one, both the weekly and the daily levels. So it's absolutely important, therefore, when we come back in here, so when we break out of the range and re-enter the daily range, because these are RD0 and SD0, while these are the weekly ones. So I get a broader view with the weekly level, and then we have the details of the daily one. So for example, when we move outside the dynamic level in this case, which is the one set every this update every 30 minutes. So for the next 30 minutes, the dynamic level is this one. What does this tell us? What does it indicate? At this moment, you see here, we have the pivot of the new BC3 range forming, which is from the opening of the American markets. So right now the price went lower and retested exactly that level. So at the moment when we move back above this little line, you can see it forming, and we move above it with a good probability. Since the two ranges are overlapping, we can now identify this as the minimum and this as the maximum at the moment when this will be completed in about 7 or 8 minutes. And we'll see why, because this could also expand this situation. So we need to this scenario in mind, which is still being defined. So it's not final yet. We'll know in about 7 minutes, because it's 15:38. So in about 7 minutes, we'll have the complete picture of what the BC3 range is. As far as the opening is concerned, look at how we are working exactly, basically following this dynamic profile. Basically, I'm going into a bit of detail with the explanations, maybe making a few trades here and there, but it's to try to give you as much information as possible, because these are truly very powerful tools. In fact, this won't be the only video. There will be many more to come in which I'll explain, or at least try to explain, the various features and the multiple applications that all these tools have together. Tools that, as I've said, I created to make it possible also for all of you to apply my strategies and techniques by taking advantage of the levels I extract with, as you all know by now, my algorithms. So as we were saying, right now you can see that we're still stuck here. Basically, there's a downward trend because in this candle a bit of volume has developed, about 14,000. So it's going to take a strong bullish push, well, a really energetic one, to break back through these levels and move upward. This is, let's say, a bit of an indecision candle. There's a bit of a body, but we can identify it as, let's say, a doji, or rather a candle that belongs to the doji family, to the doji line. And we can definitely see that at this moment the market has pulled back a little. So probably this was an area where they went hunting for stops for everyone who was maybe still long at these levels, hoping the market would immediately move up. And so often, well, the big players, do a bit of book cleaning, especially when certain levels are so close, they're intentionally broken just to go stop hunting. That's why I tell you that stops, well, you have to see, for example, how the N6 indicator can give us some guidance as it provides indications based on the ATR. But then the real stop is calibrated by actually placing it behind the level that serves as protection. The stop must have logic and make sense, and it needs to be framed within the context in which we are operating, especially with reference to the trading environment where we are going to trade. So we need to keep this situation in mind. For example, in this case, with this stop in this trade here that may have been suggested by the indicator, by the N6 indicator, I want to try this short because I like the chart setup and I agree with the indicator, so I want to follow this movement. Clearly, I'm not going to place the stop here at 1 ATR as it suggested, but using logical reasoning, I'll place it a few points above the VR0 level, which is definitely an important level that has held and has been tested even earlier in the morning. So if this level holds again and the price doesn't go back above it, it almost guarantees that the trade is good. And that's why you need to learn to make this kind of reasoning when you set your stop, because obviously the indicator gives us, well, it makes a calculation and gives us levels where we can place the stop to protect ourselves from the current volatility, since it uses the ATR calculation and sets the stop based on the ATR on percentage of ATR that we have chosen to set as our stop. But then we need to have the clarity and foresight to understand these things, which I believe are fundamental for anyone who wants to trade. Obviously, if I have a significant resistance and I want to go short, I'll place my stop a few points above the resistance, certainly not below it, since that's a level that will obviously be tested, as actually happened, a perfectly precise test of the VR0 level before moving downward. So this is a logic you should always apply when setting your stop for any type of trade you make. Whether it's those dictated or suggested by the N6 indicator or by the contrarian indicator, which I've currently the ACNO, no, here it is, it's active. So whether it's the contrarian indicator or a trade that I might have initiated myself based on my analytical skills, basically, if I want to take a trade because it's an important level, I've studied the chart, maybe I've identified a technical pattern, a reversal pattern like the ones described in my book, which I encourage everyone to read, because I believe it's fundamental to understand the techniques I use and the concepts underlying the decisions that ultimately lead me to choose whether or not to enter the market. So I went off on a bit of a tangent there because obviously, as I said, there are always so many things to talk about. I don't want to drag this video out for too long a period, so I'll be stopping it quite soon. I want to see if I can make a few more profitable trades. Let's observe for a moment if everything truly settles and firmly holds at these specific levels we've carefully identified. Because if the market stops here at these crucial levels, which are the two previous significant highs from Friday, it's the distinct double top that formed them. If we move back above these established highs, so above this dynamic level we currently have here, if we break through it decisively, it's clear that the market will undoubtedly move upward. We could also just patiently wait around here for a while, observing the market moving up and down, and then maybe go down and do a test lower, or maybe test the weekly HV level before starting to rise again. This could also be the scenario. We always have to be obviously ready for anything, or rather open to everything, looking at the chart and not getting attached to an idea that might have come from someone we follow, something we've read, some research we've done, or a preconceived notion we have, because maybe in our mind the market absolutely has to go up today. but maybe it won't. I don't know. That's why I always say I look at the moment. So like I did before, I drew out what then actually happened and I executed my plan exactly, no ifs or buts, without hesitation. That's important. Perfect. That said, let's see if we can make a few more trades. I always work with two, but it's already dropped a bit. I mean, the volumes have gone down. You can see the candles are no longer colored by VLC. They've dropped from 14 to 9 to 5 to a vertical collapse in volume, which is quite low, I think. As I said this morning in the weekly analysis, this is a short week, and obviously that means there won't be any extreme position openings, even though Thursday is a very important day because there's the services PMI and the non-farm payrolls will be released early on Thursday. So, you know, a lot of data, a lot of important data expected, in addition to all the geopolitical aspects that are at play right now. So all of this definitely creates a bit, there is some positivity, but in my opinion, there are still a lot of clouds to clear up. If the price were to experience a slight pullback and descend to the 7.90 area, specifically around 7.80 to 7.90, I would definitely consider initiating a long position, as this would present a very attractive entry point. I am actively preparing for this potential scenario, getting everything meticulously ready so that I can execute the trade efficiently. Okay, I've precisely set my target entry at 7.90, and more specifically at 7.93. We will officially enter the trade. I have already placed a pending order, a buy limit order, to automatically execute at that precise price level, ensuring I don't miss this opportunity. Let's see if the price gets there. I'm going to set a 10-point stop loss. If the price does reach it, obviously we're already in the... I'm only setting a 10-point stop because if this level doesn't hold, I think we'll probably go to test 27, well, definitely 27.5, or with a good chance also 27, which then represents today's SD0 level. But anyway, I want to try along here. I think it should at least bounce a bit from 27.9 or 27.95. It's a level that I believe it will give some reaction because the thickness is quite significant, even greater than SD0, and its length is almost the same as that one. It's been tested as HV several times, so the probability is good. Unfortunately, it didn't get triggered for me. It went as low as 27,950.5. Oh, and I have my order placed at 27,993.5. It missed me by just one single point. If it doesn't go above this particular level here, I absolutely do not want to take this trade anymore, because there's a very good chance that we will break through this significant level, this 27,990 level. No, let's not do it. Let's just leave it as it is. Let's just take a moment to see. Of course, I can also change my mind. Let's carefully observe how things develop. I want to see precisely what kind of candlestick forms. Let's see if we can spot any discernible candlestick patterns. For now, we've stopped here. The dynamic level is working exceptionally well. These more or less correspond to the significant VIX levels. We don't have any further references below, but we could potentially do something like this. For example, Anaderum. Right now, the dynamic interval is currently set to 30 minutes, and the reference is also at 30 minutes. I can increase the reference so that we get an update every 60 minutes. Let's see if we can acquire some more comprehensive data this way. No, that made it worse. So let's go back to the previous setting. Let's try 120. Let's see if that gives us any more insight. No, it actually takes some away. Let's stick with 30. Let's say that technically here we are, it's settled. We're probably at the point where we entered. No, it didn't actually take me at 795. I thought it had a Rangeno actually on MetaTrader. It gives me, well, 8 tick or a couple of ticks more compared to... It started moving again, and unfortunately it didn't take my order. The trade I wanted to make was at 793. I wanted to get in here at 810, 815, exactly as it did, but it didn't take me. Now it's not breaking through, so I'm canceling this order because we'll probably go down and it will hit my stop. Since I only set a 10-point stop, I canceled the order because, in my opinion, if we don't break through the body of the candle, and at least recover the HV, the dynamic HV, if we don't recover it and break through it, then we probably go and test a lower level. If instead we were to break through the dynamic dynamic HV level, which at this moment is 825, in my opinion 840, but even 850, we could easily reach it and it would have been a beautiful trade. Unfortunately, it missed my entry by just 1 point, but oh well, that's the idea behind the trade. These things can happen. Maybe now I had placed the order, I left it there, but in many cases, if it doesn't fill me at 93, I'll get the other two at 95. Basically, I'm trying to make trades to help you understand the reasoning more than to show you how many trades I make. For me, it's important to be able to convey this to you so you can make the most of the tools you have available. Understanding their potential will definitely give you many trading ideas, but it's important that through these thought processes I'm trying to share, you keep them in mind and are able to develop them using the same logic I'm applying, along with all the references you have. Okay, we've reached about 27 minutes of video, and I'd say it turned out well. I don't want to leave it at that. I've given you more guidance and more ideas for reasoning, and there will obviously be more to come. Thank you all for your attention. As always, I invite you to leave a like on the video and follow me on social media. Thanks again for your attention.